Good afternoon, ladies and gentlemen. How's everyone doing today? Hello, hello, hello. Is my screen visible and am I audible, guys? So, yes, yeah, I can hear myself. I think everything is okay. The sound works fine. So, how is everyone doing today? How's your trading progress going on? If you have some thoughts or some ideas that you want to share, I will be very, very happy to hear about them, all your concerns, remarks, everything related to trading, and maybe to things that are not directly related but are still concerning the world of finance. I will be very, very happy to answer all these questions. So, like I said, my name is Thomas, and I will be happy to conduct the following webinar for you guys. So, let's see. Let us see. So, what does the upcoming week bring to us? So, like I said, this webinar today will mostly we will cover some news from the financial markets. We will look at the economic calendar for the upcoming week, and maybe if I do find some trades, some signals, I will definitely let you know. And well, first of all, I would like to share my trade that closed. So I was on last week. I wasn't really active. I wasn't trading that much. I was on vacation, was enjoying my holidays, and also I cashed in some nice profit here with my Bitcoin trade. So if you click here, it will show on the chart. So basically, this seems like a perfect trade to me. I opened this trade when this acceleration phase started. So we were for a long time we were sitting here, probably 2 months around that, in the price range between 15.5 thousand and 17,000. And then once this breakout started happening, I opened the trade and I did not close the trade until it hit the take profit order. And it did so yesterday, or the day before yesterday to be exact, and I cashed in some nice profit of $3,000 from my Bitcoin trade. And I also remind you that, and probably it's not even a secret, guys, that many people have keep some money in the in cryptocurrencies, in different cryptocurrencies, and of course everyone who has been investing. So in just 16 days of this new year, 2023, the crypto market is up more than 20%. So Bitcoin, namely Bitcoin plus 23 or 24%, Ethereum around 26%, and other cryptocurrencies as well. And even today, I saw this news that the this what was it called, like FTX token of the of that exchange, of the FTX exchange, it also surged by 250%, but that is pure speculation. I think I don't even think that it can really uh, go up that much. So there was a false breakout in December, and now it's another one, but we will see. So, all right. Hello, Mustafa. How's your trading going, by the way? Do you have any things that you want to share maybe with us? Because I just know that you trade with us or attend our webinars for quite a long time, and maybe you have managed to finally or just to find your trading strategies, your um, you know, I mean, just share your progress. That would be very interesting to hear. Buen día. So, bienvenidos a nuestro webinario. Horizon is my favorite strategy. It is definitely among my top 5 strategies. Very simple, very precise, and you also last week or a few weeks back when I did trading during the live webinar, and I demonstrated what Horizon can do with trade. All right, so the next question is from Rajat. Hey Thomas, good to see you here. Can you tell me how we can take how we can set take profit in Forex to a level we predict the price will go in future. Yes, so basically what you need to do is you need to think about this, the following thing. I will show you in a second. So I like to think about everything from Forex, from the risk reward ratio point of view. Okay, so I've just googled up some pictures here because they are a very good illustration. So when opening a trade, you should follow, or I like to follow this rule of thumb. So your stop loss in every trade, we should risk. For example, you have a certain risk that you are willing to give away to the market in case in case your trade is not profitable. So in this case, let it be $50. Okay, so this is the size of my stop loss. So what should be your take profit size? It should be 3 times your stop loss. Why? Because on Forex, it is normal to have around 30 to 40% profitable trades, because oftentimes your trades, you open a trade and then it really goes in in the desired direction. Maybe it goes up and then it just drops, and then you close it with a loss, or sometimes you just close it with even without any loss or any profit. So in this case, given that only 1/3 of trades close with a profit, I'm talking about the very, very minimal ratio, but kind of like worst case scenario, right? Some people still manage to make profit even when they have less than 25% profitable trades. That's a little bit difficult, but some people manage to do so. Anyways, in this example, this is a perfect illustration. So one stop loss, and then your take profit equals 3 times your stop loss, and that is probably the best kind of like ratio, or the best scenario for beginner traders. And later on, maybe you can adjust this, and some people manage to bring it. So sometimes you will have it, you will get a stop loss to risk to profit ratio of 1 to 5, or even 10 to 1. During certain trades, it's possible. But realistically, I should say, so say $50 is your stop loss, and then your take profit, your potential take profit here should be $150. So this is a very important concept to know when trading Forex, especially. It doesn't really apply that much to your FTT trades, because on FTT mode of trading, all you need to do is you need to maintain at least let's say 55% winning trades if you trade with a fixed amount of money, or if you apply the martingale principle or our loss compensation system, then it should be at least, well, probably the minimum is like 35%, and then you shouldn't have too many negative trades in a row. So that is a little different scenario. Now, guys, what is it? Yes, so there are more tables, more stats. Well, maybe we can talk about that a little later on. So can you show me a demo using demo account? Well, demo account is not. There is absolutely no difference between your demo account and live account. Well, first of all, and yeah, but there is another thing. Another problem is that oftentimes people like to spend too much time on their demo accounts, and eventually, when they start trading on their real accounts, they have this like distortion. Their trading psychology is distorted. It's biased because you've gotten used to trade with no risk, with absolutely no risk, because you don't risk your real money. You just risk your well, I don't know, you just invest your time basically. And then when it comes to trading and risking real money, then problems appear, and that is probably problem number one when it comes to demo trading. So demo account is good. You can practice some things, maybe applying strategies maybe canceling trades, things like that, but don't stay too long on them account because it will get you desensitized from the real trading, from the real world trading. How many martingales would you recommend for FTT? Well, we all know this progression that after step 6 and especially step 7 and step 8, it goes like in this geometrical progression. And I don't think that almost any deposit can sustain more than 9 losing trades, 9 consecutive losing trades. So probably I would stay on step 6, and if step number 6 or trade number 6 is not covered, does not give you a profit, then I would probably accept the loss and I will start over. I will go back to square one and start from the very initial amount of the first trade. I think that is probably my idea, my view on the martingale. So how many martingales? Probably 6. And if after the 6th one nothing changes, then I would probably just go back to square one. Okay. All right. So a message from Mustafa here. I've learned so much from your webinars, and the progress is going forward. Thank you. Well, thank you. Thank you for watching, and of course, thank you for applying this knowledge that you get here. Yes. And good luck in your progress. Good luck in your trading progress. Right. Can you take a small trade for me to demo how we can set a target in Forex and stop loss? Yes, that's exactly what I wanted to do. So guys, let's talk about Forex today, right? Let's analyze our first currency pair, which is the euro against the US dollar. And I think recently I've been wanting to open a trade here, a counter trend trade here, because in my opinion, now we have more downside potential here than upside potential, right? So we went all the way down from this descent started in February, in early February, and then the euro dropped around 20% during this drop, and then now we have recovered. We went up more than 10%. Okay, so 20% down, 10% up. Now let us apply Fibonacci levels, right? So here they are. All right, and according to the Fibonacci levels, we have broken above the 61.8 level. That is probably signal number 1. And I also want to add the RSI indicator, and let's see what RSI has to tell us. Well, yes, okay, so this is an interesting situation here. So we have this picture here, this pattern, which is called okay, let's also open the MACD indicator, which can probably double confirm this. So going to MACD. Don't really need these. Okay, let's keep the signal lines. So we have a really interesting situation, one. So despite the price of this chart going up, we can see that the MACD indicator went into the negative area below the zero line, below the middle line here, in early December. So yeah, in late November, early December, and it stayed there almost until last week. Okay, and the price was growing, but the MACD was negative, and the same thing has been happening with the RSI indicator. Now, what is more interesting in the RSI with the RSI indicator is that we have this, the first top, the second one, and now we have the third one, right? And what is interesting is that on the third top, the value of the RSI indicator is lower than it was here on the second top and on the first one. So this thing is called diversion. Okay, so it means that it is a situation when the price, the quotes keep rising, but at the same time the value of the RSI indicator keeps dropping. Okay, so in this case, I plan on opening a trade for downwards. Okay, and so now the question is, where do I put my take profit or stop loss? And in this case, I kind of know where my take profit is, and my take profit is somewhere here around 10. Okay, so 1.06. Okay, so 1.06 somewhere here, because once the price drops here, and if it does drop here, then it will rebound from this level, because here is a very very thick level of support, and we can see how much time actually the price spent here. So there will definitely be a rebound. So in this case, we have two options. We can either use percentage, or we can also, okay, so here we actually have percentage. Keep forgetting about this, and then I will show you how to adjust it once I've opened the trade. Okay, anyways, so I can set my risk in money, or I can do it in percents. Okay, so minus 50 and plus 200. So 4 to 1. So my take profit equals 4 stop losses. Okay, so I press apply, and then I click down. Now, here is the interesting part here, and now I can see where my stop loss lies and where my take profits are. So in this case, since it's going to be a pretty, I think the idea behind this trade, in my opinion, is relatively good. So I can move my stop loss a little bit higher to make it a little bigger, and then at the same time I can drag my take profit somewhere here. So now 1 take profit equals 5 stop losses, and I think that's a pretty good ratio. So this is how I trade, and this is how I adjust my take profits and stop losses. So oftentimes I don't adjust anything before opening a trade. I kind of know, based on my experience, based on my intuition, how far the price needs to go, needs to drop, and potentially this also the profitability scale can tell me where so green is my potential profit, and minus 100 is, so basically if the price now goes up here, I will lose all my position, all my amount. Okay, so this is it. This is the logic how I open trades. And what is interesting is that here you can also click, and I can actually set the exact quote. So money, percentage, and the exact quote, the exact price where this trade will either close with a profit or will be triggered, stop loss will be activated. Okay. So yeah, even though you asked me to take a small trade, okay, I was planning to open this trade anyways, and that's it. I think that's a very good idea now, because the euro seems to be very overpriced compared to the US dollar. Despite most of the problems in Europe being solved due to relatively probably better, warmer than usual winter, and we can see that the natural gas prices from their August highs, they dropped like 66%, and now Europe is safe. Europe will not freeze this winter, which is very good, because no one wants Europe to freeze completely. So what is next? Yeah, all right. So Another thing, another trade here is so basically with gold. Last week you asked me about the continuation of this trade, and I wasn't really sure that it can actually keep going up for another $30. And I just wasn't sure, guys. I mean, I don't know. I didn't read. I have not been really following gold that much recently, but as of now, I can see that we have a really interesting situation here on the RSI indicator. We are overbought here, and we are returning under, like, towards the normal area. So I think we can open a trade, a small one. It's not going to be a big one. I will probably open $1,000, a little bit less, and so by adjusting this, I can also see where my take profit lies and my okay, so perfect. Minus 50% is here, above the high of the current candlestick, which is a good thing. That basically that is the correct place to put your stop loss order, because it is protected by the previous high. So the previous high is the high of the current candlestick, and your stop loss should lie somewhere there, somewhere above. And my take profit is also, I think, 18. Well, maybe it's a little bit too far. I would probably move it just a little bit to be more realistic. So in this case, my risk reward ratio becomes so like 3.5 to 1. Still, it's good. Not like 7 to 1, but still that is a good one. So what's the difference between Fibonacci levels and Fibonacci fan? Yes, they work. Basically, it's two. Even though they are all called Fibonacci, but they are a little different thing. So let me demonstrate to you. So this is how we apply Fibonacci levels. So for example, we have this high and we have this low. So we connect them and we extend them into the future. So that way they allow us to identify some resistance levels and support levels, and oftentimes you can see how precisely they work. So this point here and that point here, a little bit of density here, and now we have broken above. So the price broke above the 61.8 level, which is the strongest one, but oftentimes it does a correction from there. Now, what about Fibonacci fan? So Fibonacci fan is a little well, almost the same thing, but looks a little different. So you can adjust them, and I usually do the same thing. I connect a very obvious high that I can find on the chart with the obvious low, and then I kind of see, you can see that there was a level of there was an entry here, so some resistance here, some resistance here, then there was a breakout, another 0.5 resistance, 0.61.8. So it's kind of like playing ping pong, right? So the price is stuck between these rays of the Fibonacci fan, and you need to basically do some ping pong, play some ping pong with the chart. So you do these short-term trades usually, and you try to identify like local reversals or maybe even global reversals. It depends. Okay. Personally speaking, I like Fibonacci levels much better than Fibonacci fan. That is my thing. I don't really like Fibonacci. I don't know, just Fibonacci fan I don't like so much, but Fibonacci levels is, in my opinion, is a pretty good thing, and oftentimes it gives you a very, very accurate accurate view of the market, and oftentimes it really tells you when, especially when to place your take profits, because oftentimes what happens, one of the main issues is that people stay for a little bit too long in their positions, and like one problem is that people sometimes they close their close their trades preliminary. They just cannot sit and wait in a trade, and they don't they just take a small profit from that trade, and they just leave so much on the table. They don't take it. And another problem is that at some point you could be making like a big amount of money already, but it comes in the form of unrealized P&L, and then you don't take this profit, and then the price drops and you exit this trade with, say, for example, 10% profit instead of making 200%. So greed is kind of bad and good. It's good that it is our motivation to start trading and actually do something, but at the same time, greed can be bad if you don't if you become a little bit too greedy, and your expectations of the market become a little bit unrealistic. Okay. Now, another thing that I wanted to talk with you guys today is not natural gas. I want to talk about Brent. And with Brent, situation is interesting. Okay, so let's apply a few indicators and let's see what's happening. Okay. So once again, the RSI indicator. So the RSI tells us nothing, really. MACD. Yes, we are slightly above the zero line, but also nothing really interesting. And yeah, why don't we apply, say, kind Martin strategy? Let's see what the combination of these is gonna tell us. All right, so once again, nothing. All right, so it seems that we are in some sort of a sideways movement. When the price is not really okay. Oh wow, why is it 1 minute? Hold on a second. Okay, because that was kind Martin. Okay, so kind Martin, disable strategy, and again enable strategy, and then change your time frame. Okay, forget about changing time frame. Now, so this strategy, the combination of the parabolic SAR together with the MACD indicator, now suggests that there might be an up trade, continuation of this up trade, upwards push. We have a real strong level of resistance right ahead of us, very near to us. So I think that can stop this trade from, that can stop this asset from actually growing in price. And yeah, that might be the problem here. It just won't go up, and it is above the zero line here. So two layers of confirmation tell us that the price can go up, but at the same time we are stuck a little bit before this level of resistance. Now I did open a trade, or basically that was probably Thursday, and I'm still holding on to this trade, but I don't think that the price will go up a lot before this level of resistance is broken. But at the same time, we can also have a quick look at the 7 day. Okay, so 7 days also nothing really, really nothing. Okay, so I kind of want to say that the price can go up, but at the same time, the recent moves have been very slow on Brent. Since late November, we've been staying here trading in this narrow range again. And I think before there are new catalysts on the market that can actually push the price upwards or downwards, until then the price is very likely to stay where it is. Okay. So based on Fibonacci levels, only you open FX trades, or you combine other advisors? Yes. So here's the thing about the Fibonacci levels and other things. So you can actually apply the Fibo grid or the Fibo levels to your, okay, so I want to remove everything, Fibonacci levels. So the thing about Fibo is that it can actually be applied to almost everything. Okay, so let me do some demonstration here. All right. Okay, so let's imagine that I found this trade, this asset like this, when it's this new wave, this new growth wave was happening, and I connected this this low with this high, and then afterwards, after that, the Fibonacci level is gonna tell us possible reversal points. Okay, so and you can do some ping pong here, open trade here, 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 and after the level is broken, you can also open downwards trades. Now, I think I did a webinar dedicated to this topic pretty long time ago, when during the whole hour I was only using the Fibonacci levels, and probably I should do a little bit of that next time. So what I don't like about Fibo is that you have to do a lot of manual work, like you have to draw them manually all the time. But generally speaking, it's okay. So as long as you get a pretty good ratio between profitable trades and losing trades, that is okay, because what matters is your profit. So your profits matter. Okay. And now we can probably even here open a trade. Like now it will probably drop a little bit, and if it does, we can even use a pending order here. So for example, okay, so 0.881 like this. Okay, here's my pending order, and here is my another 145. So okay, 145, and so now the price is trading between these two levels. So we have this upper level of resistance, and we have this lower level of support, and this is how you can actually trade with the Fibonacci level. So if you look back a little bit, if you can track back, you can see that possible trade could be here, and then possible down trade. So trading Fibonacci levels can be pretty intense, pretty quick, because you have to watch these levels, and you have to work with your pending orders all the time. You need to change them, you need to modify them, you need to adjust them. But generally speaking, it's also a very productive way of trading, because the Fibonacci levels work. I know, Fibonacci levels, they just work. They just work, and they have been tested for a pretty long time. So let me try to find some other level. Yes, another situation here. So in order to use Fibonacci levels, you need to find a very distinctive move. So maybe this part, this area of growth, or this this drop here. Okay, and now once you found that, you need to press the Fibonacci levels. You click it here, you connect this high and this low, okay, and you extend it into the future. Okay, now I can clearly see that there is a level of resistance here. I remember the quote, I memorize the quote, 75, and I press down, and here is my pending order here. And I can also set a pending order for an up trade. All right. So do I have trade? Yes, I have a trade here. This pending order got triggered by the price. This pretty big Pinocchio bar. So pin bar. This very short body of the candlestick with a very long. Well, here it's extremely long. This um, shadow of the candlestick. Okay. Wow. So it's quite interesting here. And we can see what's going on with the GBP. Okay, so they are in correlation with one another, the euro and the pound, because they are both against the US dollar here in these two currency pairs. And we can see how, yeah, and we can also open maybe another trade. Okay, so you can open trades manually, and you can open trades automatically with, or semi-automatically with the help of pending orders here. Okay, so that's the trick with pending orders. Okay, also guys, I want to remind you, because we had a discussion this morning, and this discussion was about whether you should do everything yourself, or like all the analysis yourself, or you can rely on trading signals. So just as an idea, I would like to remind you that we have trading signals which are placed right here at the bottom of the chart. So you press here, and we have three categories of signals here. These signals are automatically generated, so there actually is no explanation about like why these or how exactly these signals are generated. There is an algorithm that uses signals from multiple indicators simultaneously, which are simultaneously applied on a chart, and then it gives you this cumulative result. And well, yeah, you can also track back and see the efficiency. Now, in my opinion, these 1 minute signals, they don't work well. I have this, I strongly act against 1 minute trades. So in my opinion, 3 minute trades is your minimum duration of trades that anyone should use in trading. Now, at the same time, you can see that we have intraday signals, and these intraday signals, they range from probably 5 minutes and up to 1 hour. So probably 10 minutes and 1 hour, maybe even 4 hours. I think I saw something like that. And the beauty of these signals, because many times people ask me, so how efficient these signals are? Well, you don't have to trust my word. You can, at any given moment of time, you can track back these the history of signals, and you can see how many signals would have worked with profit. Now, I can see that so 1532, 1530. Okay, so 1520. When was 1520? Okay, so 1520 signal. That was an up signal for 10 minutes, and nope, that was a losing signal here. This one, and at the same time, this signal 1530 came exactly at this very bottom, and that would turn a profitable signal. Okay, so I wanna open a trade here. So from the next Fibo level. So yes, the two current signals probably would be profitable, and you can do this exercise very easily, because all the information is there. So this 1 hour signal came at 15:05, so 35 minutes ago, and it trade for another like 25 minutes. So you can use these, you can apply these signals exactly as they are here. So 10 minutes or 15 minutes as soon as the signal appears, or you can also kind of trade along the trend. So considering that these signals, they indicate the overall trend for the next 10 minutes or 15 minutes or 30 minutes or 1 hour, and you can kind of follow the general trend line of the price, and then open trades accordingly. Okay. Wow, another question about deposit money wasted, not added to my account. Yes, the best thing that you can do is address customer support directly, because they manage to find 99.99999% of deposits, and lost deposits can happen. They don't happen often, but sometimes they do, because, well, it's machines, and even machines sometimes are wrong. I mean, bank transfers between our platform and intermediary who process these payments. So there is nothing, it's not really the end of the world. Ask customer support and they will help you find your deposit. We have been operating, I mean, the company, the OLYMP TRADE broker, 8.5 years, maybe close to 9 years will be soon, close to 9 years. And this really proves that, well, people trade with us successfully, and all deposits that maybe are lost somewhere, they eventually are found. Now, so my trade here, the euro. So yeah, I think that's an illustration, guys. All right, now this trade on the pound also got triggered. Okay, so that is the logic. Now, of course, with Fibonacci levels and other indicators, with the parabolic, SAR, and other indicators, it depends. Sometimes you might have 10 winning trades in a row. Sometimes you might have a few losing trades in a row. So the only way to tell whether some strategy is suitable for you or not is to open at least 50 trades according to any strategy, and then based on that you can actually get some more professional reply to yourself, and you can really decide whether this strategy is for you or is just not for you and it's a waste of time and money. Himanshu Kapoor is good advisor, and can miss you, sir. Please call me, sir. Well, yes, I think you should have his working address. I think it's h.kapoor@olymptrade.com, and you can always text your account manager, or you can ask, you can text customer support, and those guys, they will help you find your account manager. And yeah, Himanshu is a great guy, and he also does conduct webinars from time to time on our channel, mostly India channel, OLYMP TRADE India. So feel free to join those webinars, and you will get some useful information, and you will expand your trading and market knowledge. Now, guys, I think we should be wrapping up this webinar quite soon. I just want to wait maybe until these two trades close. Now, a very important thing to do is to always cancel your orders, your pending orders, before you leave your trading platform. You want to make sure that nothing is you don't have some pending orders which you have forgotten about, because otherwise the situation on the market might change, and then your pending order gets triggered, and you might have you might experience unnecessary losses. So it's all about discipline, and it's all about just basic attentiveness. You don't have to be like a rocket scientist and mathematician, but you have to be you have to treat this activity, I mean trading, seriously, because well, that is money. Because with one mouse click you can either make $100 or you can lose $100. And if you have 10 random trades, if you make 10 random trades, you're risking say $1,000. Okay, now guys, I think that was a pretty good demonstration of how the FIBO levels work. So I had one refund, one losing trade, and then 1, 2, 3. So it's going to be the fourth winning trade. And you can now open a trade upwards. So see, the price, it kind of goes from one level, from one Fibonacci level to the other one, and it just goes up and down like this, like ping pong basically. So guys, I think this will be it for today. Did you like the webinar? If yes, click that like button and don't forget to subscribe to our channel. I will have another trading. Well, let me double check in my schedule. Maybe it'll be on Wednesday. I want to tell you exactly. I want to tell you for sure. So yes. So tomorrow there's gonna be, so Kanak, our friend Kanak will do a webinar on the rodeo strategy, and I will do the same trading session on rodeo, but on Wednesday, so same time. So follow our notifications on the channel and also on our text messages or emails. And well, that's pretty much it. I wish you all good luck in trading. It was a pleasure conducting this webinar for you guys. Love trading, live trading, and I will see you soon. Bye bye.